All right, I love it. Ooh, some real estate investors out here. Nice. I love that. Okay, so let's throw a 5 if you have never purchased any sort of real estate yet. Wow, I love it. No 5s. We all own real estate. Yes, I love it. So this is the perfect class. Okay, one 5. Okay, a couple 5s. Oh, some more came in. Well, this is the perfect class for those of you who are beginner investors, as well as those of you who have never invested in real estate, and some of those intermediate. If you're too advanced, maybe you should come on and help us teach the class. Lou, let's pass the slide. Okay, perfect. So as Matt mentioned before, we have a 4-class series. And so today we're going to cover why we invest in real estate. And hopefully some of those reasons why we invest in real estate will translate to reasons why you might want to invest in real estate, and it might fit in just right into your current life situation. Then we're going to take it one step further, and we're going to show you ways that you can start investing in real estate. Now, there's tons of ways to invest in real estate, both passively and actively. We're going to cover some of those passive ways, but we're really going to be focusing on active investing, how to build your team, how to understanding your various exit strategies, and how to finance and find those real estate investments that you're looking for. Tomorrow, we're going to dig a little deeper. We're going to show you some examples of how we buy residential real estate profitably, because as you may or may not have heard, in real estate, you make your money when you buy, not when you sell. We're also going to dig even deeper tomorrow. We're going to cover how to fix and flip homes. We're going to show you some of our systems, and we're going to talk a lot about our experiences. And the king of value adding himself, Mr. Ben Lapp, is going to come on the mic and show you his secret sauce for maximizing his return on investments, which is pretty epic, guys. On Thursday, we're going to round the corner, and I'm going to share with y'all some of my experiences buying real estate at different REO auctions and different lender direct platforms that I'm very familiar with, that I've been buying from for many years. Then we're going to close out the course with Real Life Trading's very own foreclosure whisperer, Mr. Luis Alejandro Lopez, who is going to cover in great detail the foreclosure auction process and how to take steps to mitigate your risk when you're buying properties directly at the foreclosure auction. But most importantly, we're going to have a ton of fun. We're going to share a ton of stories. Some are going to be scary, some are not, some are going to be fun. But now we're going to hear from Mr. Ben Lapp on why he invests in real estate.
It's a great question. So let's talk about why. Why would I choose to invest in real estate? Why is it that some of those stats are there about 90% of millionaires? And potentially, why would you want to continue investing in real estate and or start investing in real estate for the first time? So those are all great questions. And a wise person once said, I don't remember who the quote was from, and so that's why I'm just saying it's a wise person, but I do believe this guy had a lot of wisdom. The quote is, only great questions get great answers. So if we want a great answer, we've got to learn to ask great questions. So let's ask ourselves a little bit more about why real estate. And so in 2016, when I was making a career change, I decided to get into real estate. But some of the questions I asked myself were, can I still be doing this when I'm 90 years old and using the skills that I've learned all my life from this point until then? And add to that question the curious fact that I've never met a successful real estate investor who didn't wish that they had gotten started sooner, given the chance to rewind their life. So those things kind of coupled together was a question that I was like, that's worth pursuing. It's kind of odd that you don't meet somebody who's like, yeah, I did it, but I wish I'd never gotten involved. I personally haven't met somebody who wasn't successful and had that story. Another question I asked myself was, does real estate fit into the bigger picture of what I want to do with this life I've been gifted? Does it fit my purpose? Is real estate something I will be dealing with for the rest of my life in homes I buy or places I visit? Yes, absolutely. It will. And I think like was mentioned earlier, really real estate is all around us, whether it's the motels we stay in, whether it's the Airbnb that we stay in, whether it's our house. We're going to have a place to live for the rest of our life, hopefully. And bingo, we've got video. That's fantastic. So if this is something that I am always going to be involved in, I want to learn it, I want to understand it, and I want to invest in it for the long haul. Another thing is, you can ask yourself, are they making any more land? To my knowledge, I think, in over by Dubai and things like that, they are creating land in the ocean, but there is a finite amount of land in this earth, and population growth is continuing to happen. So it only goes to reason that with a fixed supply and increased demand, appreciation happens, which is beautiful. So people always need a roof over their heads. And so there's a lot of other reasons, and you can think about that and make a list of reasons yourself. But before we go into that, let's talk a little bit about you. Questions to ask yourself. Why are you going to invest in real estate? Again, does this align with your life's purpose, or is this something that you can learn, and during the process of learning it, you can become a better person in that process? What are you wanting to accomplish by investing in real estate? Is it cash flow? And what I would say is, different people can be investing or even going through this course for different reasons. Some people might want to, acquire just steady monthly income. Other people might be looking for, larger chunks of cash at a time, from 30 to 80 to who knows what, 1,000 at a time you can get in doing active real estate investment, which is house flipping. So is it to build, long-term wealth, or is it to build a business, full-time real estate investing business, or is it just simply a part-time side business? So there's a lot of questions in that. And I think that one thing is crucial, and what I would just highly encourage is to take a little bit of time and to get clear on it, because knowing your why and knowing your reasons is going to help you persevere. Because real estate, like really anything else in life, is not an easy cakewalk. There are going to be some hard lessons. There are going to be some great lessons, but anything worth doing is worth persevering at and learning well. So I just want to encourage you, get clear on your why, so you don't give up at the first obstacle that comes along your way. While there are many more passive ways of investing in real estate, we will touch on in a second. The main focus of this course is going to be a more hands-on and active type of investing. So, Lou, if you could go to the next slide. If we kind of simplify it, there really is mainly two types of real estate investment, and that is active investments and passive investments. Active meaning it takes active management and oversight. Passive meaning you put your money in and you get a return on that money, whether you sleep or whether you're awake. So there's two main categories, but it has to do with how hands-on you are about the transaction. So let's talk a little bit about passive investment. This course is centered again around active investing. So we're not going to, spend a whole lot of time on passive investments. But the goal of passive investing is you make money while you sleep, and it's protected by the asset or the management team in place. These have a little bit more of a fixed rate of return, not as much fluctuation. These are mostly controlled by the management team or the investor that you have invested in. So think stable, long-term, nothing too flashy, but steady increase or return on your investment. So this can be what's called a REIT. It's a real estate investment trust. And that's basically a corporation that invests in income producing real estate and is bought and sold similarly to a stock. There are real estate syndications, which is a partnership between several investors, strategic, capital, skill set. And this helps investors acquire properties together that they couldn't do on their own. There are real estate funds, think mutual fund for real estate, lumping massive pools of money to acquire many, many different investment properties. So the pros of passive investing is you get paid cash flow and participate in asset appreciation without being involved or getting your hands dirty, so to speak. The cons are that often you have little to no control of the individual real estate projects. So if you are a beginner and you're wanting to get into real estate investing but feel a little uncertain about it and want to tiptoe to start, a great way would be to find a friend or someone you know and trust, and you could do a small loan with them to get your feet wet and just say, hey, I know you're working on this project. Do you want me to invest 40,000? Would that be, a value add for you? If I invest 40,000 for the project and in exchange, you can pay me a little something monthly. That is essentially a passive real estate investment. So let's talk a little bit more about active investments, because that is going to, again, be the main focus of this course and tomorrow night, and actually even the rest of the week. That is, we're really focusing on active investment. So if I could sum up the difference between active and passive, it would be like the old saying that goes, with great risk comes great reward. I'm sure you guys have all heard that, but it's very, very true. So there are definite advantages to both categories, but typically with active investment, your return on investment can be significantly higher and bigger chunks of cash at a time. Active investing has the potential for a significantly greater return on your investment, but it takes your time and oversight. And your skill set. There's nobody to blame when you make the call and it was a bad call and you lose money. Similar to stocks, you push the button. While we don't like the result, really the blame for that falls on us. But along with that comes your exposure to risk, again, relying on your judgment and your management of your time. You are the one gaining on the upside, but you're also the one losing on the downside. Think of active investing as really a good, high-paying job. It will continue to take your time and management unless you build it as a business or pay someone to be the manager of your properties for you. The pros are you have full control and manage all aspects of the business. The cons of active investing is that it can be time consuming, again, depending on the level of management you have in place. But essentially with active investment, you sell a property and you wake up the next morning and you have to do the same thing all over again because there's no property to continue to pay you. So again, there is definitely an advantage on this. But for this class, we're going to be focusing again on active investing and more specifically flipping houses. So this involves getting down and dirty. This involves hands-on. So I'm willing to do that. And one of the things for me is it allows me to rub shoulders with more people, whether it's hard money people, we'll talk about that. But active investment, you're rubbing shoulders with a lot of different people at a lot of different parts of the process. And that allows you to learn the whole way through. So, life is really a lifelong learning process, and don't expect things to just fall into your lap. Your commitment to growing and gaining knowledge and your value for your own experiences will be rocket fuel that will help you far surpass any hurdle that you face in the short term. And since we all know building the team is key to long-term success, let's hear it from Lewis to teach us about building our team.
All righty. So any questions so far, anybody? If not, the big thing here is that different than what we do in the stocks, that we just go sit down on the computer and click when we're trading. Real estate is actually a team sport. Okay, you're going to need all those people on that sheet to help you go and work your project. So let's talk a little bit about each one. The contractors. We're going to call contractors right now every kind of contractor that you can find. GCs, general contractors, handymen, let's include painters, plumbers, landscapers, technicians, ACs, all the people that can work inside in your home, let's call the contractors, okay? Good contractors are really hard to find. We're gonna look into that tomorrow. But the best option that I found is contractors that give me really good recommendations or come with really good referrals, okay? You don't want the most expensive crew. You don't want the person that is hurting for work. Okay, a good contractor should be busy, but able to put you on the schedule very soon. Okay, next, the real estate agents. Real estate agents, first of all, you do not need a real estate agent to sell your own property or to buy property. However, a good real estate agent, their help is invaluable. Okay, they have, ideally, you want to have a person that is specialized in dealing with distressed properties. Okay, and is used to working with investors. You want a person that has created himself a niche, either in a market or a typical property condition, or a person that has a niche, okay? Not necessarily you want to go with your aunt's friend or somebody else that you might be a referral. Interview a few, and once you interview a few, you can find a person that is really, really connected to what you're trying to do, okay? Next one, a capital source. Like we first said at the beginning, we sometimes don't need that much capital or money at all to do real estate transactions, but we will need the capital. The capital is not ours. We can always get capital source. These sources of cash can be hard money lenders. They can be passive investors, like Ben was saying. Maybe you have a friend, maybe you have a family member, has some money laying around and want to invest with you, and you split it for a profit share. The other thing you can use is line of credits, or you can use banks. They're basically the local banks can give you loans based on the property, or line of credit based on the property that you're trying to buy. So what I'm trying to say also is, do not get scared if you don't have money. If you come with a nice deal, money will show up. Money is not the issue. Next, we're gonna need a title company. The title company is an impartial company whose complete mission is to complete the real estate transaction exactly in the terms of the contract. That's what is called a closing, okay? Additionally, those title companies offer title insurance. So in order to offer title insurance, they do a full research on the property that is being transacted, and they offer what is called the title search. The title search is a report of the whole history of the property. And we're going to need those when we see class 4, when we're trying to do the foreclosure auctions. We're going to need those title searches. Okay. Real estate attorneys. The real estate attorney is not a matter of if, it's a matter of when you're going to use it. You're going to use it either for, to set up your company, so it's a profitable way. You're going to have some time at some point, you're going to have problems with, tenants and landlord problem issues. They're going to be the ones helping you. They're going to have disputes with contracts. They're going to be the one helping you. They're going to be problems with any type of issues regarding a purchase of a sale of property. They will be the ones to help you with that. Try to find, usually real estate attorneys partner with title companies. And when you do your research for a title company, try to find out if the real estate attorney can work for you as well. The inspector. An inspector is a great pair trained of eyes. They are trained to look for problems in a property. That's what they get paid for. Okay, so you will want the most methodical one that you can find. Ask a few agents and try to find the one that is, they call it the deal killers, because they walk in and they see every little thing. That's exactly what you need. Now, not to dissuade you from buying a home, but every problem that you see is a problem that you have to fix. Okay, and that problem has to fix has a cost, and that cost has to be in your budget. So obviously the offer that you're going to put is going to be less, okay, less money. Another person that you're going to need is an appraiser. I don't use it too frequently, but the appraiser is a real estate evaluator. It's the person that will the bank sends to a property to calculate their value, okay? An appraiser works, the appraisal is an opinion of value. They are trained, they are certified by the state, they have a license, okay? And they also go and use the same procedure over and over and over again for the lenders, for the banks. They're going to use the same procedure for you. So for example, you're trying to sell a home, you're not sure about the price, maybe you think you can sell it higher. I'm actually going through this right now. We just ordered a new appraisal, we figured out the price, and from that price we listed the property. Okay, so it's good to have it on your team. The last person, it's an accountant. I'm not going to go into what an accountant can do, but they can save you a lot of money. Real estate has a whole bunch of tax deductions, so talk to them. Okay, so let's talk about now, what's the exit strategy? The exit strategy is the plan which the investor intends to remove herself or himself from the real estate deal, meaning you just got a property, what are you planning to do with it? Okay. So the two options are there's several options, but the ones that we're going to talk about right now are either I hold it for cash flow, I hold it and cash flow it, or I hold it for to sell. So there's three ways that we're going to talk about it. First, we're going to talk about wholesaling. Wholesaling is the process where you get into a contract for a property without the intention of buying it, meaning that you get to the property with a contract. Immediately you find a buyer, a suitable buyer for it, meaning an investor. You are a middle person. As a middle person, your deals are not going to be too thick in profit, but they're going to be very quick. Okay. So you want to have big volume. Wholesalers are usually the persons that will send you mailers that will put, bandit signs on the streets and stuff like that, which are the ones that are turning over properties and properties and properties. In order to do that, you will need to have a really good buyers investor list, because you really don't want to get, a property to hold it because it's not your business plan. The second plan to sell a house, to exit the property, it's flipping, which is what we're going to pretty much going to talk about tomorrow all day. With flipping the property, what you do is you're adding value to the physical assets. So there's a longer time limit in your project. You will purchase the property, it will be in your name, okay, either with your money or others people's money, which capital source, again, an investor, hard money loan, something like that. And you're going to fix it, and hopefully you're going to sell it for a profit, which is always the plan. The downside of here is, like Ben just said, once you sell that property, you have no more money coming in. So you get a nice, sexy, big chunk of cash, and then nothing coming over, and you start to hunt over and over and over again. Okay. We try usually, yes, that's correct. Very sexy cash, but at the end, you don't have the monthly stream of income that we need. So try to make your profit expectation about 10, or I try to do it 10 to 20% of the money that was invested in the home. So if we invested 100 grand, your profit should be about $10,000. If you invested 300 grand, your profit should be between $60,000 to $30,000 in the project. Okay. The last one is renting. We all know what renting is. Basically, you let somebody use the property and they pay you for it. Okay. They help you provide a stable income, meaning that there's usually a check coming at the end of every month. Okay. The other great thing about renting is that you get depreciation on the asset. Again, I'm not a CPA. Talk to your CPA, but I've done a lot of people that basically the taxes keep passing and passing and passing and passing and passing. And yes, one, Hector, I know. And you never pay taxes on that money. You never pay taxes on your asset. You don't pay taxes on that income. So talk to your CPA. The renting, it's a very, very, very good way to make money. Okay. So the other thing I want to talk to you is be flexible. If you buy a property with intent to sell it and something happens and you might end up renting it, maybe renting is a better solution in that moment. Maybe you bought something with the idea to wholesale it, and guess what? Let's just, let's rebuild this whole thing. Maybe you have enough profit. So take your time, be flexible in the approach that you're going to take. Okay. So now that we basically discussed the why we're getting into real estate, let's talk about where. Okay. So Hector is going to talk a little bit about where you should invest and which markets and locations.
Actually, before we get on the topic here, Luis, if you give me like 2 seconds to add something to the previous slide that you had, because remember, we have a room full of stock market lovers and traders and stock market participants. So the way that I like to kind of relate these 3 exit strategies to the stock market, I like to look at wholesaling sort of like my trading options or day trading options, I should say, where it's quick. You don't really hold the stock, you just buy the options, and your intention is to be in and out relatively quickly. I like to put flipping in a pretty similar category as swing trading, because when you're flipping, you're in the project from a number of days to a number of months, which is pretty similar to flipping. It's kind of like an intermediate strategy. And renting, I like to kind of compare to the long strategy, the position trading, where you're in for many months and sometimes years, which is pretty similar to renting. When you are holding a property for a cash flow or rent, you're going to own it for many years to come. That's how the economy of things become better and your profit improves throughout the years. All right, let's move on then. But like Luis said, being flexible with all 3 strategies will maximize your profits to the fullest, because one will offset the others, the gains from one, the losses with the others. But where should I invest? Should I invest locally or afar is a question that a lot of my friends and family have asked me when they decide they're going to get into real estate. And I basically like to answer that question with a couple more questions, because it comes down to personality, your goals for investing in real estate, and your local market conditions. So The first question you have to ask yourself is how resourceful and how technologically inclined are you? Do you have the ability to solve normal everyday problems by jumping on Google and finding the answer? Realistically speaking, these days, I can do a lot with my laptop and my phone because I'm already comfortable with the technology. But if you're not comfortable with the technology, that might be a hindrance to you investing from afar. What's your personality type? Can you manage a team from afar, once again, from your phone, from your laptop? Or are you more of a micromanager who has to touch every aspect of your project? Do you want to see the paint as it's going on the wall or see the doors as they're being installed? Well, in that case, then you should probably just invest locally, or at least locally, so that you don't add additional stress to your investment. You're already starting out a new venture, a new career, or a new investment type. So don't make it any harder than it needs to be. Just keep it simple. More importantly, is assess your market, your local market, or the far away remote market that you're considering. Investing in a downtrending market where the job is low and existent is extremely risky and should be avoided whenever possible, especially if you're a newer investor. There's obviously a lot of benefits to investing locally. For many years, that's what I did. And that was my preferred method. When my alarm would go off at 3 o'clock in the morning, I just jump in the car, drive 15 minutes down the road and check on my property, see if my appliances were being stolen again, if I had to call the police, and all of that good stuff. When I'm investing, I just have to make sure that I count on my team that Louis just mentioned, and I have to be comfortable letting my team take charge whenever any of these emergencies pop up. But more importantly here, guys, is just determine your own personal risk appetite, your investment style, and then start doing some homework on the markets that you're considering. Luke, can we move over to the next slide? On this next slide here, we're going to show you exactly what I look at in my investment companies when I am looking at a new market. I look at these very 5 things right here amongst a bunch of other ones, but these are the top 5. Number 1 is to examine my market at a both local, regional, and even at the state level. How is the job growth? Usually job growth will lead to population growth. And while you might have great local and regional growth going on, if your state senators and your state politicians are doing things that are going to hinder the growth of the market in the next 3 to 5 years, you want to try to stay ahead of the ball. Real estate is a slightly slower market than the stock market. So it's going to take a little bit for things to take effect. So you want to make sure you're staying on top of things, on top of laws that might hinder your market in the next 3 to 5 years. We always try to stay in the path of growth. We try to look at the economic trends within the market that we're investing in, areas where the cost of living is low and the quality of life is on the rise. We try to avoid markets where the economy is weak and the population is stagnant or decreasing. It's definitely a risky situation. These days, we also tend to look at investor saturation because this is a professional business. I'm not doing a one-off here and there. So I need volume in order to grow my business profitably. I never want to be the only investor or the first investor in any area. I also find that for the flipping side of my business, it is really difficult when I have a lot of increased competition. My costs start to rise and my ROI starts to decrease, and that's no bueno for anybody. A very easy way to tell when a market is completely saturated is those bandit signs that Louis alluded to earlier. That's a problem down here in the South Florida market where we're at. You pull up to just about any stoplight or stop market in Miami, and you'll see 5 to 6 different signs from different investors, whether it's cash for houses, I buy houses, my daddy buys houses, my uncle Tim buys houses, from every way, shape, or form. Or if not, you'll see that cash only deal that you can get 40% below market value on that sign, and it's it leads to a wholesaler basically. And then you see 5, 10 of these with different investors. It's not the same guy that's cornered this market. No, it's a bunch of people. That to me smells like a market that's completely saturated. So I try to avoid it. A little healthy competition is great, but too much drives the numbers down too much. I do a lot of this research on the high level. I start off with the US Bureau of Labor Statistics. That's BLS.gov, BLS.gov. It's going to tell you how labor is doing in a particular area, how the unemployment rate is going. Down the state level, unemployment and counties and cities that are growing slightly larger than the rest of the state in the area that I'm investing in. I'll go as far as checking the local chamber of commerce to see what news they have out or what initiatives the area has out. And then I'll go on realtor.com and I'll see what the realtor trends are, how long the properties are taking on the market, what price they're selling to and compared to their listing price, how many properties are available in a particular market. All of those help me decide if a particular market is worth getting into or avoiding. Once I decide the market that I'm in, then now it's time to go look at where I can find properties to buy. Look, there you go. So the truth is that there's 1,001 million ways to find residential properties. You just have to be resourceful. Ben that said this in one of our brainstorming sessions, that it's like digging for gold. You got to sift through a bunch of dirt and eventually you're going to find that one little gold nugget. It's not much different when you're looking through real estate listings. They're not going to fit your buying criteria. So know what you're looking for. Be resourceful. Talk to your local market experts, your brokers, your wholesalers. Go to your local real estate investor group meetings and find out what is working in that particular area that you're looking to invest in. Tell every person you know, your family, your friends, the neighbor, the guy washing the car across the street, that you buy properties, and let them know what kind of properties you're looking to buy. This way, they'll refer people to you in the future when things come up. You have the from today till tomorrow thing. This is something that happens after months and years of letting people know what it is that you do. Marketing directly to sellers, as Louis said, is also a great way of finding off-market properties. And as I mentioned a couple minutes ago, realtor.com. This is one of my favorite active listing websites for areas that I don't have access to the MLS. Because it is the most up-to-date data directly from what the realtors post on the MLS. And then come my 3 favorite ways of buying properties: REO direct platforms and the REO auctions. Now, for those of you who are not familiar with the word REO, it simply stands for lenders, banks, or large real estate holders. It literally means real estate owned. So I'm looking for real estate that's owned by lenders, whether they're selling it directly in their platforms or on the auctions. And lastly, foreclosure auctions, which, as I mentioned before, we're going to be covering these 3 items on class 3 and class 4. Now, auctions and lender directs have one drawback, and that is that they require cash or cash equivalents. And they very often do not offer any finance contingency. So Ben, what happens if, unlike our very gracious Matt DeLong, our listeners don't have a huge bag of cash under the mattress?
Then it becomes, who do you know? No, it really is the value of connections. Type a 2 if you guys are enjoying this so far. I know it's a lot of like nitty gritty details, but anybody getting anything from it? Anybody enjoying it? A lot of 2s. I'm going to definitely type a 2 myself.
How many 2s can I put in there?
Yeah. Yep. Show me the money. That's exactly it. That's exactly it. So show me the money.
Sequel knows what it's about.
That's right. I think Lou mentioned it earlier, but really, if you have a good deal, finding money will be no problem. And so I want to try and save you, I guess, from some of the mindset hurdles and things that I had starting out. When I was starting out, there was a lot of things going on at the time, but I really did not have much capital. And having, the connections that I have now, or knowing what I know now, could have started on a completely different playing field than what I did back then. So hopefully we can help set you guys up to get going. But I'm sure you guys have all heard it, whether it's a YouTube advertisement or hearing it from a friend, but about doing real estate with no money out of your own pocket. And those deals definitely do exist. They are somewhat of a unicorn because it depends a lot on the deal. But if you ask yourself, how can I do a flip property when I don't have hundreds of thousands of dollars in the bank? And is it possible to buy a property, do the renovations with little to no expenses out of your own pocket? And the answer most definitely is yes. And the answer, step 2, is hard money. So what is hard money? Hard money is money that is based on the value of the asset. So what would make a lender be willing to put all of the money into a deal? And it would be either they see your experience and know that you can turn a project around quickly, or the project has steep equity, meaning it's massively under the market value for the renovations that are needed and to be completed. And the lender will lend on the purchase price as well as the renovation expenses when you find a deal like that. So again, hard money is a term used for a lender that is willing to loan money out in exchange for a security on a hard asset, AKA hard money. So this is not your traditional bank loan where they need all of your personal financials, your tax returns, your birth certificate. They really, you go to a bank for a traditional loan. Yeah, I know it feels like they want your firstborn too. I told my wife after our first time kind of going through that process, and I was like, man, like, do they need to see anything else? Like, what? Feels like they're probing and asking questions on all that. So they get you great rates in return for the hassle they put you through. But when you are in the flipping houses business, you don't have time to wait around. Sometimes you need to close quickly. Sometimes it's like a week later. Other times it's things like an auction, kind of like what Hector was just talking about, where the auction company will not allow you to have an extra 30 days or 45 days or have financing contingencies. They want to know that you're coming to bid on the auction and that you've got cold hard cash to back up your auction price that you agree on, or the sale price of the auction property. So again, it's a loan. Hard money is a loan based on the value of the asset. And this is only for investment properties. There are some regulations, and you can research it, Dodd-Frank rules based on what happened in 2008. So there are some regulations and things like that as far as interest rates and things for primary residences. But typically hard money terms are not conducive for a personal residence either for a long-term hold. The interest rates are high, and so it typically only makes sense to do it on a short-term loan, AKA anywhere from 3 months to 6 months. And I know a lot of hard money people will do loans that are typically like a year, just to make sure that there's no issues and give the investor time to do the adequate things they need without running into a jam. So the fees on hard money typically range anywhere from 2 points and like a 10%. And what I mean by 2 points is basically a 2% origination fee for underwriting the loan. And hard money people will have different requirements on what they want to see from you. Some do want to see like a personal financial statement. That's it. Some want to see, that you've done at least 5 other flips before, but there are plenty of hard money lenders that will do it for first-time investors. And I know personally, when I was getting started, there were several hard money guys that offered me a wealth of information. So typically hard money guys are people that guys and girls, let me be clear on that. But typically there are people who have invested in real estate themselves, or are super knowledgeable about it. Again, that's what they're lending in. And so you can use that connection piece to gain a wealth of information. The guy that I used when I first got started, had flipped and had, I mean, it flipped over 700 doors, but had owned as rentals 700 units, whether single family homes or apartment buildings. So he had a wealth of information, and I gleaned a ton from him to get started. But again, your hard money source is supplying money for you for the deal, but also establish that connection. They can provide so much insight into a deal specific question that you have. So the fees range anywhere from 2% origination fee to 10% annualized interest, or 5% origination fee and 15% interest. Somewhere in that range, typically you'll find multiple options. So make sure you know and understand what the terms are before you get a property under contract, so that you are not scrambling and lose the deal. And what I would say is reaching out to several hard money people and just being like, hey, Joe, for example, I am getting started in real estate investment. These are the kind of properties that I'm looking to go after. If I find a property, let's say that I have a property that's going to be worth 100,000, would you lend on 50,000 of that? Or would you lend on up to 70,000? Typically they will be in the 65 to 70% of what's called the ARV, which is after repaired value. So that's purchase price plus the renovations. And what is that house going to be worth after those things are done? We're going to dive into that a little bit more tomorrow night, so you can get comfortable with what that formula looks like. Again, kind of like Jeremy says, with stock trading, it's really second grade math. It's not super complicated. It's not a lot of fancy numbers and percentages and things like that. It's really basic math to figure out if a property is a good property to buy or not. So again, a big benefit on private hard money is that they have a quick turnaround time. They have the cash in the bank anyway. They can give you a proof of funds letter quickly if you need that to get into the auction or whatever the situation is. And again, there's not a long loan underwriting process. They'll, like I have one guy that basically I can let him know, and 2 days later, he's ready to go. So to fund it. So you will want to establish that relationship and the partnership and add value, and make sure you're doing what you say you're going to do as well in the process. But that's definitely a valuable relationship to have as you begin house flipping. There are other companies that are kind of a blend between the private sector and the institutionalized sector. And that is, there's a couple to name, but there's many more. One would be Lending One. Another one is Lending Home. Another company is called Host Financial. Lending One really has incredible rates, and I know they're across quite a few different states. So would definitely recommend checking them out. Yes, it is lending. Thank you, Lou. Appreciate that. So Lending One. And again, these companies are a blend between the private sector and more institutionalized lenders. So they have realized that the market for this is massive, and they've eliminated a lot of the long underwriting process a conventional bank would have, but also save you quite a bit on points and fees and interest rates and things like that from a typical private hard money lender guy. So another way to,
and to add a little bit on that real quick, I've actually used both of these. I know the founder of Lending One from many years ago from his prior venture, and they are both Lending One and Lending Home, like you said, a really good mixture. Yes, they're not going to get it done in 2 days like your guy that you could, probably send an email to or text, but they're going to do some underwriting, but they typically can get that done in about 2 weeks, maybe 3 max, which is a really, really good turnaround time. And the rates are going to be probably half of what that hard money guy is going to be charging at 15. They're typically somewhere around the 7, 6, at least, for me. I haven't dealt with them in a little bit, but I see that they've reduced their pricing on their website. So they are really good resources if you're looking to get into real estate, flipping and or rentals. They do both.
Mm-hmm. Thank you. Definitely check them out. Again, they are across quite a few different states. So there's a high probability if you're here in the US that they would be able to work with you. So another avenue for capital source is a renovation loan. And there are conventional bank loans for this. And then there are also private lenders that are a lot easier to work with. But these renovation loans will there are some, if you're going to move into it as a personal residence, there are fantastic renovation loans on that, but we're not focused on that. We're focused on investment properties. So we won't go down the personal residence renovation loan on that. But these are going to vary by conventional and private lenders in your area, but typically there are quite a few options, and we'll let you put just 10 to 15% down, and then they will fund the renovations as well as the purchase price beyond that. The pros to this are that you get much better rates, anywhere from, you know, half a point origination fee to 5 to 8% interest rate. And that is typically interest only payments for the loan while you're doing the renovation. The cons to this, to a renovation loan, is that there is a longer closing timeline typically, and there is bank red tape in the process, meaning they will have to order an appraisal or things like that typically. And again, going back to, if you're buying a property on an auction, you won't be able to do that with something like this on a typical renovation loan. Another way to fund your deal that you found is to get involved in a partnership. The pros of partnership are: get creative. This really can be structured in a million different ways. You talk through the options, look at what each party is wanting from the partnership, and then make it happen. There are many guys, and I think, you know, again, if you're getting started, there would be hard money people who would say, hey, I will help teach you. Like, if you found a great deal, a case in point, if you found a deal for 40,000 and it's going to be worth 100,000 afterwards and only needs 20,000 to be fixed up, there are plenty of hard money guys who would help walk you through that process. If you want to partner on it and just say, hey, I'm going to do the work, in exchange, you fund the deal and let's split the profits. Again, that's just an idea, but there are many different ways to create a partnership where everybody gets what they want out of that transaction. So get creative on that. The cons to partnerships are that this can mean more profit sharing than the other options, but you also have the decreased risk by bringing in a partner and not having to carry the interest payments or expenses for the renovation. So two other sources would be like a self-directed IRA or a HELOC, which means home equity line of credit. Has anybody ever used their HELOC for purchasing a real estate investment? Type of 1, if you have done that.
Threw my one in there, a couple ones.
Yeah, you did.
Done that a few times.
Using your real estate to buy more real estate. It's a fantastic thing.
I mean, is there another way?
Exactly. It is a fantastic way. And what it allows you to do, because typically on a HELOC, you get great interest rates. And so you're going to be able to fund your own investment property. You can be your own hard money guy in that instance, saving yourselves thousands of dollars, and use your own HELOC to buy an investment property in that instance. So great sources to fund your first flip or your 10th flip or however many you want to use. But those are great funding and capital source methods for that. Matt DeLong says, I lent money at 15% and borrowed it at 3%. Absolutely. You know, that's essentially what banks do day in and day out, man. It's a great market to be in.
You mean you made money off the spread, Matt? Oh my God, what a beautiful thing.
That's great. Leah asks, can you use a HELOC to buy another home?
Yes. Absolutely. As long as your HELOC is large enough to afford that purchase price, Leah.
And in the bankers using their microscope and going through things and checking all of that, you can actually have two home loans as well. You can have a secondary home loan. So pick a great place for that to be, but they will allow two home loans on your record. But yeah, they'll look at, you know, what is your debt to income ratios and things like that. But you can definitely use HELOC for the down payment for another home. Anything else you guys would add on that?
No, unfortunately, GS, I have not heard of anyone doing HELOCs on raw land. The limitations with HELOCs, as far as my knowledge goes these days, I've only found Navy Federal who's willing to do HELOCs on properties that you do not occupy. The name is Home Equity Line of Credit. So 99% of banks and lenders that I found will only issue a HELOC if you are living in the property at the time it's issued. Now, what I've done is take out the HELOC prior to moving out and renting the property and keep that HELOC alive because now it's open. And it sits there nice and ready for me whenever I need it. It's just like a credit card. When I want it, I tap into it. When I don't need it, I pay it back. Super cheap interest rates and super easy to tap into.
And additionally, there are limitations around raw land because the bank wants to have the warm and fuzzies that the money that they've given you is protected. And typically on raw land, there's not the value of the house and all of that. And they're just kind of stuck with the land if you would default on your mortgage. So typically banks won't lend near as much of the value of the land if it is just raw land. But I know that there are many instances where people have land banked have sat on land for a long time and it's worth significantly more. It's just banks aren't that fond of lending 80% or 90% on raw land.
Yep, correct.
Yep. Jean-Pierre is asking, so the HELOC is only for primary residence? Yes. You need to be in that house, living in the house, and obviously need to have equity for them to issue a HELOC. They will not do that in an investment home. Okay?
Yeah, like
investment
I said,
home, maybe your best option is refinancing and pulling cash.
I've only found one that that would be willing to do it on investment property. That was Navy Federal. They had a ton of restrictions and they offered a very small amount. Leah, to answer your prior question, on banks, I would advocate for your local. I know you're here in South Florida, so try to find a local lender, a local bank. And that's going to be better than your Wells Fargo and your Bank of America, for particularly for HELOCs and for lending period, even for your home.
Mm-hmm. Absolutely. We can actually kind of go into a little bit more questions. I think before we do that, Louis, you want to go over, talk a little bit about what next step is before tomorrow, and then let's ask some more questions. So get your questions ready after Lou.
All right. So what would a good class be without homework?
Yes.
So let's do some homework. All right. So the idea of the homework is to get you guys excited. What I want you guys to do is go into this website. Go into realtor.com, go into redfin.com, or Zillow.com. Either one of them will work. All three of them will work. I want you to find a property or three properties, okay, that are listed for sale, that it's obvious that it's a flip. How do you see it's obvious that it's a flip? Usually the property is vacant. Usually the property is completely redone, okay? Now, take note of the work that was done, okay? And if you go down in the history of the property, you're gonna see if the property was recently purchased, okay? You're going to see if you go down the website after the photos and everything, you will see the property was purchased maybe 3 months ago, maybe 6 months ago, maybe 3 weeks ago, who knows? Okay, take note of the purchase and take the third website, it's realtor.com. It's Realtor, Redfin, and Zillow. Okay. So take note of the work done. Did they did a kitchen? Did they did a bathrooms? Did they just clean it up? See, figure out what they did. Identify the purchase price and the date. Okay, and with that, using the new listing price, I want you guys to calculate how much is the gross profit that we're going to see, and I want to see how much is the transaction time. Did they take 6 months? Did they take a year? Did they take us again 2 weeks? And they put it back in the market. There's a lot of things out there. You will be surprised that people just go paint and it's out on the market. Especially our friends on Zillow that they're doing lately. I've been taking a couple of friends out for showings and they are looking. No, you can do sold. Matt is asking if it can be sold or closed. No, they can be also active. Actually, Realtor is gonna put the ones that are active or pending. Yep, David, that's you. We've been looking at properties and Zillow just slaps a little bit of paint and put it back in the market 2 weeks right after they buy them. So properties that are for
the ones
sale.
that are active.
Yes, active for sale or
You'll have
pending.
the ones that are active, yeah, and they'll look really,
Yeah, you're
really
not gonna
nice.
see the ones that are closed on
Mhm.
unless you start looking for the addresses themselves. So if you pop the app or you pop the website, you go into the map, you're gonna see all the listings that are active in your area. That's what I want you to start looking into them. Okay, any questions?
So did you get all the way down to identifying the purchase price?
Yep, and we're gonna calculate the gross profit and we're gonna calculate how long did they take them to do a full renovation or whatever renovation they did.
So in two ways, Matt. In some instances, obviously, most realtors, most good realtors are going to list everything that was done that is new because it's a remodeled property and they want the buyers to know. And then sometimes you can also find the prior listing on Zillow.
It has the history with the previous photos.
And you'll see the previous photos, exactly. And then you'll be able to tell the price that it was sold previously a few months ago on the history. If you scroll down on Zillow.com or on Realtor.com, it'll tell you the property history, the last time the property was sold. So you'll be able to tell the date where it was sold and the price they paid for it. Yeah, why don't you jump on that, Luis? I think
Let's find one.
Example, you got the browser open, make it happen.
Let's see. Actually,
I would do Hollywood.
Hollywood?
Yeah, right there. Any of these areas around here, you know how hot these areas are.
Yeah. All right, so here's Zillow.com. Here's the property that's for sale. Okay, and if we go down on the listing.
So this property clearly is occupied. There's furniture there. So this more than likely is not a flip. You can see.
Yes. You see, you guys, this previous owners bought it in 2015 and they're just listing it now. So this one is not a flip. Okay. And it's listing and sell, listing and sell, listing and sell. So this property is overpriced or has a problem because it's been on the contract 3 times and people backed out. Let's see something here. It's this, the home that I'm looking for. David, you're around? So this home, I personally took a friend of mine. He's over there wanting to buy the house. We put a home in list. We put an offer on this home. Okay, you see the property is vacant.
Oh, this home is owned by Zillow.
It's owned by Zillow. This is the home I was talking about. They just slap some paint and put it back in the market. So if
Okay, so this is, yeah, this is a perfect example.
It's a perfect example. Previous owner bought it in 2001 and they just sold it to Zillow for 472. And what is Zillow doing? Selling for 474. What are they trying to do? They're trying to do, no, they'll put that face. That's what they're doing in this market. They list low and they start, making a bidding war. So that's what happens. Down here, South Florida, everybody's buying above asking price, way above asking price, and no operational contingencies and all kinds of things. So this is an example of a flip. Okay.
So if we circle back to the homework, you'll notice the work that was done, I guess here in this one is not precisely evident, but you'll be able to identify when Zillow purchased it, when they listed it, and you see the price difference of what they paid for it and what they're trying to get for it now. And clearly there's not that great of a spread.
There's no great of a spread because that's not the business model. The business model is basically drive prices up and make themselves a name at this point.
They buy high and sell high or take a loss because Zillow has been losing a lot of money on this side of their business because they are just doing it to gain market share.
For example, the kitchen is completely done in this home. So we have a brand new kitchen. We have remodeled bathrooms. We got brand new flooring. Okay, and some kind of work is on the bathroom, but not too much. Okay, this one doesn't have, since they was bought directly by them, the idea doesn't show on the old photos don't show, but this is pretty much what we can do. Let's say this home sells for 500 even, then the gross profit is going to be 25. Oh yes, it does. Trust me, we went to see the house. It's not really nice.
That is rough.
No one said it had to be a good looking
It's
flip.
rough. Of course, and we'll see that tomorrow. Flips, whenever you guys start doing it, please do it the right way. It's gonna come back and bite you, you know where, if you do a half job. Okay.
Albert, that is a great question. Albert asks, besides being vacant, what other hints tell us the house is a flip? So turnaround time, you can see very easily on whether it's Zillow or Redfin or Realtor, you can see when the prior purchase date was and what the prior purchase price was. So that would be the biggest indicator, but that, and then also, as Hector mentioned, you'll often be able to see like the list of improvements and things like that in the description of the property. Any other tips you guys would add on there to help separate out a flip?
No, basically that is vacant and you see that there's, you know, junk done to it. Oh, of course, let's see this one. Mr. Matt DeLong sent us this one.
Is this your flip, Matt?
Of course it is.
That is pretty.
Good for you. So, so you have to share your numbers then.
We'll see the numbers. Oh, wait.
On the
It's here.
spreadsheet, man.
Sold for 210.
Okay, so let's look at what is the history? Go down.
Here we go. Take a deep breath. Okay, what did we do? 3 bedrooms, 2 full bathrooms, fences rear. Kitchen is all new, quartz, backsplash pantry, hardwood floors, already refinished, both bathrooms are completely updated, new paint throughout. So he did a full renovation in that home. And let's see. Yes, Albert, if the previous rent is usually recent, it will indicate a flip.
Yeah.
Because nobody buys a home and, you know, stands with it for 3-4 years just to flip it. They usually will rent it or stuff like that. Okay, listed for sale, pending sale, listed for sale. I don't have more information.
It
Did you went a couple of times in the market, Matt?
So yeah, I could share the numbers. I hadn't looked at this listing in a while, but I could share the numbers if you guys want to see. Type of one in the chat in if you want to see kind of what I paid for it. I thought for sure it'd show up in here, but I guess it doesn't. But type of one in the chat in if you would like some numbers. So we'll start backwards. Obviously sold it for 210. I used a realtor, so I have some real estate commission that I had to pay as well. So I actually paid, you ready? I paid $85K.
Jesus.
Nice.
I need to move to Kentucky.
Plus $50K of renovations.
Yeah, I can see that.
Yeah.
And then I paid a wholesaler $10K for the deal. So I didn't actually go bang on doors and try to find this. My agent did a virtual like a virtual staging there, so it's pretty interesting. Some of those have like looks like furniture, and even though it's virtual, it says virtually staged. Yeah, that's pretty neat.
And we're gonna talk about it tomorrow.
Yeah,
one of the things that we discussed.
So this is basically what my numbers were. I paid 85, put 50 in it. I paid a wholesaler 10 grand just to find the deal for me. So I'm on a couple mailing lists. You get text messages, emails that says, hey, by the way, we just got this deal for 10 grand. It's yours. Obviously you pay. And so we went to the closing table. Yeah, my cash paid the original seller and we paid the wholesaler. He got his cut and everyone's happy. And so again, literally, if you are interested in investing in real estate and you don't necessarily want to, let's say you want to day trade, which I love that analogy, Hector, you want to kind of day trade, get in and out quickly, then maybe wholesaling is your thing. Obviously, this class, we're talking specifically about flipping and auctions and foreclosures. But in this case, I paid a chunk of money, and the deal, I actually looked at 3 or 4 that he had, and this was my favorite. And so I really personally, I like the 3-bedroom, 2-bathroom because that's, or larger, usually around 2,000 square feet. It's my favorite. You can certainly do smaller, but there's diminishing return, and you get two, like a 2-bedroom, 1-bathroom. It's obviously a small family, but for me, this is what I like: 3-bedroom, 2-bathroom, around 2,000 square feet. This one had a basement, but yeah, I bought this one in May of 2020. Yeah, there you go. There's my numbers.
Great deal, Matt. Well done. That was a good
Beautiful,
deal.
beautiful deal.
Yep.
Way to go out there and scoop it up right in the middle of COVID.
Yeah, and then also, if you have, so what I didn't tell you was actually my daughter, my youngest, she wanted to learn how to do this, so we actually bought this one, and we looked at a bunch of houses in Nashville. Just everything, as you know, Ben, is just crazy overpriced, and this one was had really good structure. It's just some of the cosmetics had been neglected for quite some time. And so this house was built in 1905 or 1905, 1910, something like that. And it had no dishwasher. So you'll see there, we had to hire an electrician to put a dishwasher in. You'll see right there on the, in the kitchen. Yeah, there you go. We did, we spent a little extra money on quartz instead of granite countertop. We went to I forget what that's called, where there's like it's like a junkyard type thing where they have odds and ends shape. I forget what that's called.
Perhaps.
Permanent yard.
Yeah. So, and I only needed a certain number of square feet for the countertop. So I got like a killer deal on that. The countertops guys came in and installed all that. We went to Lowe's, got the appliances delivered, like all that, just in and out. And I will say that the biggest headache on some of these will be your contractors. I don't know if you guys agree with that, but one of the lessons I learned is there's a certain sequence of events that has to occur. So depending on how much you're doing in your renovation, if you're just painting and carpet, putting lipstick on a pig, it's a fairly easy in and out. What you don't want to do is need a pretty big rehab and then put lipstick on a pig. I've actually bought one where someone had done that. They put a little bit of carpet, a little bit of paint, and then wanted to make a $50,000 profit off of it. And I'm like, this doesn't make any sense. It's nuts. It's like they want to try to get a retail price for it. But as you guys are going through this homework, just be mindful of what you're looking at, and be mindful of, if you're comparing houses, like, oh, I think I can sell this project that I'm looking at for this, be mindful of the finishes that you're comparing it to here, right? So here we have the subway tile. We use the black grout.
The black grout.
Yeah, I don't know if there's, oh, here's another thing. Go look at that living room there with the gray fireplace.
Yes.
My teenage daughter built a farmhouse board on Pinterest for free. It was her dream. And so a lot of these colors and stuff we used right from her vision board. And she was 17 at the time when we did all this. So all this is pretty new for her. And what you'll see there is we also have like the original ceilings that were there. There was this crazy faux tile that we knocked down, and it exposed the ceiling like up another 8 or 10 inches. So we knocked all the faux tile down, built all that, and kind of brought some of that back. So yeah, it looks pretty good. We were super happy with it. We did bring in someone who specialized in hardwood floors. It kind of sanded that stuff down, put a couple coats of stain and like 3 or 4 coats of clear coat on it, and it just really looked amazing. So yep.
Fantastic.
Great.
7-year-old flipping house, so we can all do it.
There you go. You can pull that one up on realtor.com. Louis, this is the one that you and I were looking at when we were actually in the auction this morning, and we were buying the property. We were trying to buy the property like a few doors down from that one right there that I just sent you on the chat pane, Lou. This is the one that was a flip that we were looking at as a comp. And this one's super obvious that it's a flip when you look at it. And this
one other tip I've learned, guys, I don't know if you're going to share this, but Lowe's gives 10% to military. My wife is former Air National Guard, so every time I went, I would give them the name and all that, and so we'd get 10% off at Lowe's. So
that's great. Yeah, they also only has one picture. Home Depot will do a on realtor.com. It has all the pictures, Lou. Home Depot will also do a discount if you spend over, at least here in South Florida, is over $1,500 in one shot. You can sit with the Pro Desk, and they will actually sometimes go as high as like 10-15% on a discount. That obviously requires you to buy the bulk of your materials all at once, but it works a lot of times. I've used that method several times. And you actually, if you with Home Depot, if you sign up as a pro, you actually get discounts on paint, and you get cash back as well. Like from time to time, I'll get like a $75, $100 gift card, things like that.
Mhm. All right, this is the one. Oh, this is the one with the
Yeah, this is the one we were looking at, I think today or yesterday, whenever.
yeah, the com that we were looking at. All right, so this is fairly first time to see it's a flip. Brand new palms with really fresh mulch. Okay, they just cleaned the front of the house right before listing.
Yeah,
Brand new
that's super
flooring.
obvious. For you guys that were trying to figure out how to spot a flip, everything is done. Everything is touched. Somebody took the time to meticulously clean this place up and leave it like this. That's pretty obvious that it's a professional doing this. I'm not saying they did a good job or a bad job. I'm just saying it's a professional done.
Yeah,
job.
they did
It
a
looks
good job.
really nice. It looks really nice. And then if you go all the way
Flooring
down to
throughout.
history, you'll see when they purchased it and what they paid for it.
Nice kitchen. So they did everything. Second bathroom. I like the detail that they match in the backsplash in the kitchen.
Those little details will pop out in the buyer's mind when they walk to the bathroom after walking through the kitchen, and they'll love that. Those are those little details that for not a lot of money put your home above the neighbor's house that might be just as nice or remodeled, but that your buyer likes that particular, and it creates an emotional attachment to the property.
Here,
And yep, there you can see that history right there.
you see, they bought it for 192, September 2020. Okay, and they were ready with the project in November.
Yep.
And they took a while for them to sell. So they went to contract a couple of times, actually.
No, it sold twice.
Oh, sold twice. Okay. Still.
Yeah, so this guy bought it and then now he's
130 grand.
selling it again. You gotta love the South Florida market. It's hot right now, guys.
Yeah.
This last guy wasn't even the one that flipped it. It was a previous guy.
Yeah, he sold it and he resold in 5 months. Jesus. This one didn't make any money. By the time he paid commissions and everything, he washed out.
Emily, great question. We're actually gonna dig deep into staging the property tomorrow, but we'll kind of give you a little bit of a preview. We have mixed emotions about that. I have staged in the past. I still do sometimes. Ben likes to stage a little bit more than Lewis and I.
I never do.
For me, it really comes down to when it's a buyer's market, then I stage, then I go above and beyond with those things. Or if it's an awkward house, if it's a seller's market like today, I'm not wasting the money.
No, there's no point.
There's also the virtual things where there's software that my realtor used where it looked like somebody had put furniture in there, even though they hadn't actually done that in real life. They just virtually touched up the photos to make it look like, and they of course marked the photos on it saying virtual.
Yeah, they have to do it. They have to do
And
it.
that I've done more often, Matt. That I've done more often, and that I prefer doing that sometimes over a full-blown staging, just because literally it's the cost of the photographer. You know, a couple $100 gets it done. It gives the buyer an idea, and then they get to see the property when they actually go in person and the raw stages. Yeah, you'll see them pull out the phone and look at the picture of what the couch looked like and it makes sense because it gives them an idea of what the room will look like with their furniture.
But yeah, absolutely. Good staging or virtual staging companies will do a great job with that. Even shadows and lights from the blind, like in those pictures there, you can see that they'll spread that out over top of a couch or a bed or whatever. So they do a really good job with that. And it's fantastic. I mean, you get great photos for your brand. If you are, building a real estate investment company, you'll have great photos for your portfolio. But then, again, when people come and walk through it, there isn't staging in the house. But yeah, definitely pros and cons. And we're going to dive into that more tomorrow night. But great question.
And usually the other thing is the photographer. We're going to talk a little about tomorrow. But the photographer that you're gonna choose, because you're gonna choose a photographer to take your photos. Don't take photos with iPhones, don't take photos with Androids. They usually can do the service either of doing drone shots, and also they do the virtual staging. Most of them they do. Oh yes, Leah, I know. We are here. Let's see.
It is actually one of the reasons why we are exercising the slide that you saw earlier for reviewing markets and analyzing markets. We have stopped pretty much all activity. I mean, I look at a couple things that my wholesalers and my sellers send me, but honestly, I'm hardly finding deals that I want to get into, and not just Miami, but Broward County as well.
New price.
We
Sellers
are
motivated.
into other areas.
New price. Let's see what was the original price.
Still seems overpriced to me. I don't know. It seems like a
I don't know the market, but I don't think a home that expensive is gonna sell with a kitchen like this. That's for sure. Where is it? Because usually people at these prices, they want the house turnkey. They don't want to come and deal with anything. So this is gonna be a hard sell unless they reduce the price and get somebody takes the time to do it.
Yeah, it's a great question, Leah. And actually, I kind of like that you're pointing this house out. So this is kind of crazy. 1.6 million, and you have laminate countertops. We're going to talk a little bit more about this tomorrow, but man, I think we could all, I think we could pick we could pick apart this house in quite a few different ways. But you will, without a doubt, and Matt DeLong mentioned this earlier, but there are people, like I live in Tennessee, and we're having a little bit of a have had a housing surge like crazy, where buyers from California, have a little 2,000 square foot house in California that was worth 1.3, and they come here and they're like, I can get 3,000 square foot house for 900,000. Well, and exactly. And so they're paying crazy prices, but then people start thinking, oh, well, my house, I can just get whatever. And they're pricing it way high. So that is, and we'll talk a little bit more, about where to find properties. And I believe Hector talked a little bit about it tonight, but one of those is recognizing a house like this house, it's not matching up for the price point. So is that going to sit on the market for a while? Is that one that you could go after? Because there's without a doubt a value add opportunity to be had on that house, to bring that up to, what the current market price would be. I don't know how long has that one been on the market?
Let me check it. They reduced already 100 grand and still it looks overpriced. But again, it's Miami, so you never know who's going to show up. Since July, and they reduced the price in September, so they're due for another.
Is it waterfront by chance? Or
no, no waterfront, nothing.
It's near the water.
I mean, it's a fantastic neighborhood. They have no pool.
This is a fantastic neighborhood, and Leah brings up a good point. This might just be a teardown for the area. I mean, it's not small. It's 2,300 square feet, so that's about average for that area. But in some of these higher end neighborhoods, you will see these houses get torn down and they build a nice 2-story, 4,500, 5,000 square foot house.
But nobody's gonna buy at this price for a teardown.
It looks like it has a tarp on it too, doesn't it? Like in this picture right here, it looks like there's a tarp.
Yeah, I see the tarp. Yep. What do you? A roof leak does not devalue the property, man. What are you talking about? That adds value in Miami.
Yeah.
In Miami, that drives up prices, man. Blue tarp.
Where was the tarp? I missed the tarp here.
Right there.
Yeah.
No, that's a house across the street. They're basically showing you the driveway.
Oh, okay.
You see the sail here.
So your neighbor gets a tarp.
The neighbor has a tarp. You see, this is the same sail. So they're taking the photo from looking out, so you can see the nice neighbor.
You know that RV is rented, Leah. You know it. You know they're getting that Airbnb money.
You have to, if the house is worth 1.6 for that neighborhood.
Actually, that's pretty common in some areas here in South Florida. Rentals have gotten so expensive, people would just rent out their RVs or buy an RV.
You have your.
It's wild
Here's
out
your
here.
tarp.
Yeah, I see now.
Expensive.
Here's your tarp.
Maybe they're Tesla solar tarps. Maybe that's what it is.
I love it. I love
But
it.
that is Leo, that is a good example. I mean, really what we're as house flippers, what we're looking for is the worst house in the best neighborhood.
Yes.
So
At the best price though, not this
The
price.
best price.
at the
yeah.
best price, 100%, but that could be something where you just keep knocking on the door, whatever it is. Hey, they want 1.6. Hey, I'm offering you 950. It's going to be a
Exactly.
quick, clean close.
Yeah.
Month goes by, nothing. It's crickets because they're listed way high. They're not getting showings. Hey, just checking back in. My offer of 950 quick close is still there. You know, just kind of being persistent and checking in. You get many deals that way.
I know
Absolutely, I
people
agree.
that have done that. I got a good friend of mine that does it in the Aventura area. He goes and he has a place. Let me see if I can find it. I believe.
Yeah, talking about that strategy, Ben, I've actually
He
employed
only
that
buys
strategy
in this
for many
neighborhood.
years, many years. We had the 25-to-1 strategy. I could find 25 properties on the MLS, offer on all of them, and I would at
Yep, that's
least
an
buy one
Aventura.
because I'll just be persistent and stay on top of it. And
Sky Lake.
while my offer was a little bit of a low ball, my realtor stayed on top of them, and eventually deals came through. People, 2-3 months later, and not this year, not 2021, because the COVID market is ridiculous.
Yeah.
But anytime before 2019, 2018, those strategies worked amazingly well. It would take a little while, but they panned out, and those are those easy deals. Those are those easy deals that we're going to go through tomorrow. When you get deals like this from the MLS, the nice benefit is, yes, you have the competition, you're fighting other investors, but you have all the contingencies and the safety nets of a standard real estate transaction that you can protect your money and your deposit up until the last minute that you actually buy it. You have time for contractors and inspectors and all kind of cool stuff that when you're buying on the auction, like Louis and I do, you don't have that. It's just you and yourself. You look at the picture and you roll the dice. There's a lot more science to it than that. We're just kidding.
Okay, so let's recap the homework. Matt is asking to recap the homework. Let's do this. So we're gonna find 3 flips in our market. Okay, let's note the listing price and the date that they were listed. Okay, then we're gonna take note of the work that was done. We can look at the photos, we can look at the description. Okay, we're gonna go down to the history and identify the purchase price and the date where the investor bought it. From there, we're gonna calculate our estimated gross, which is the difference between the price they paid for the price they're asking, and we're gonna figure out the transaction time. So we're just gonna subtract today from the day that they bought it. Let's figure out how long it took them to do a complete flip. Okay, and yes, completed flips.
Yeah, you might not, if you can't figure out exactly all the work that was done, that's fine. You'll at least be able to see the difference between the first purchase price and the out price. You're not here to estimate the repairs right now. You're just looking at the gross. Not yet. Tomorrow we'll dig a little deeper, and you'll be able to start to figure out what those repairs
Yes,
are.
and remember the expenses also depend on the market. Some markets labor is way cheaper, materials are more expensive. In some areas, labor is it's really expensive, and then we can work around. So what I spend here for a kitchen is not the same thing that Ben spends over there. It's probably not the same that Matt is spending in Kentucky. So it depends on your market. So we're gonna go over that tomorrow. That's part of the plan.
Thank you, Karen. We appreciate you coming to check us out and spending the time with us.
Absolutely.
Cool, team. We'll type a 3 in the chat pane if this has been helpful and you are super excited to see what's in store tomorrow. I'm gonna go ahead.
My 3. It was amazing. It was very helpful for me.
Yep. Really happy.
Cool. And you guys got to see my handiwork too.
Yeah.
All right, so tomorrow let's go over that, and tomorrow we're gonna look into the actual process of doing a flip. Okay, we're gonna identify a property, try to get it into a contract, we're gonna fix it, and we're gonna sell it. So see you guys tomorrow.
Hopefully make what was it, Louis? A
big chunk
bundle
of cash.
sexy cash.
Big chunk of cash.
Sexy cash.
Yes, sir.
We don't want ugly cash around here.
Hey, I
I'll
don't
take
discriminate
all
on
the
cash.
I'll take ugly cash.
I don't take those ripped up bills. All right, thanks everyone. We appreciate your time and for being here.
Guys,
Good night.
see you guys tomorrow. Thank you so much.
You got it.
Have a great night.
Bye, guys.